It seems like right now
But
markets are more focused on the reopening of economies more so than these trade tensions. Is it justified for you to buy in on this rally and chase it?
look, I think the rally so far is justifiable because we have a very powerful rebound from the COVID shutdowns, and also there's a massive amount of policy. U.S. dollars cheap. I mean, to borrow U.S. dollars. So there's quite a lot of support for the market at the moment. But I think this is initial recovery. Initial recovery always looks like a V. As that V starts to flatten off, possibly coming into the third quarter, then I think the market would probably need more concrete activity or evidence to move up further. So I'd say that during the summer will probably more likely to flatline rather than continue to rise.
Yeah, we just had a guest previously that was saying that she's seeing the reopening trades are in play right now. She's buying into some of these travel stocks. Do you think it still needs some more evidence to basically rotate out of consumer staples into discretionary or tech into some of the cyclicals now? What sort of evidence do you still need?
No, look, I think now is the rotation, right? That is happening because people are more convinced about the recovery, and so you get the energy guys, the materials, the travel guys, those that are more the more cyclical, more discretionary guys that were hit harder, and so you have the catch-up trade, and that's happening now, and I think that's fine, it makes sense. But ultimately, are we going to end up with more economic activity, say, in the fourth quarter than in January or fourth quarter of last year? I think the answer is still going to be no. And the bilateral tensions between U.S. and China is going to feature more prominently, for investors.
Ken, which assets are most exposed to these rising tensions, and is there a hedge that you're looking at?
So I think, I think first of all, longer term, I think the consumption story, the tech story, even if it's a bipolar world, healthcare, all those things still work, right? I think those are the ones you want to be in for the long term. But in order to kind of overcome the short-term volatility, what you want to do is perhaps hedge the currency side. The currency has been one of the, I guess, the first things to move in past tensions in 2018 and 19, and I think this time the market will move it for the authorities. So I think it could be the CNH, it could be the Korean won, it could be the Aussie dollar. These guys are probably more vulnerable, and I think hedging these currency risks probably helps you to stay in your long positions better.
And in the region, which countries are looking best placed, do you think, to weather those trade tensions and to get the upside from the reopening story?
Well, I think at the moment we're probably going to see a bit more follow through in Southeast Asia, as a part of the recovery story. But China still has the widest, the most diverse offering in terms of equity, different industries, right? So in terms of consumer, tech, and healthcare types of exposure. So I think the investor interest will still be mostly focused on China. Yeah.
Ken, you mentioned healthcare, that play is still very much intact. We've seen the valuations, they're actually back into those pre-crisis levels now when it comes to healthcare companies here in the region. Is this becoming more than just a defensive play to you? Is there kind of more of a long-term strategy when you look at some of these stocks?
Well, I think, when you look at healthcare valuations across Asia as a whole, we're probably at the most expensive we've ever been, right? So that's typically a pretty negative signal. So again, I am a little bit more cautious about that. When I said healthcare, I more meant it for kind of a longer term investors. But at the short term, right? If you're a trader, I will not be prioritizing healthcare. Instead, like Tom was saying, we have more of the, the COVID recovery sectors in the cyclicals, for example. I think those guys probably do better in the near term.